Hello, this is Jared Goldberg along with Connor Cope and Petros Hatzividzadula. We are presenting on the British Virgin Islands as a fiscal paradise. Um, so first, our agenda, we're going to cover, Petros is going to cover the history of offshore banking and its impact, as well as an introduction into the British Virgin Islands. And then Connor will be taking over for the history of the BVI. Then lastly, I will cover the BVI tax laws as well as important cases. Hope you enjoy.
Offshore banking might have various confusing definitions, so we're going to focus on the most important one, on the offshore financial center, which is oftenly mistaken for tax haven. In fact, an offshore financial center, broadly speaking, is a market in which financial operators are permitted to raise funds from non-residents and invest or lend money to other non-residents, free from most of the conventional regulations. It's primarily a concept that originated just before the 1960s in London, where the Bank of England urged merchant banks to process transactions of non-residents as they were processed outside of the country, even though they were still in London. In that sense, they were processing and doing transactions offshore. This whole market was later coined as a Euro market, and it didn't capture so many eyes until the 1960s, where the United States companies started abusing it and using it more and more. Now, at that point, a lot of small North American and Canadian banks could not sustain the heavy infrastructural costs to set a base in London. So what they did was they started building bases in the British overseas territories, which in essence had the same regulations. And that included a lot of small Caribbean islands, for example, our British Virgin Islands. In that sense, British Virgin Islands happen to be tax havens. That's why a lot of people, in a lot of examples, confuse the two terms and equate them, even though they're slightly different. The whole concept of the Euro market and the offshore financial centers started gaining currency and started capturing governments' intentions. Because a lot of governments were losing a lot of business and transactions in that way, they reluctantly agreed on creating their own official offshore financial centers subsidized by the government. So the US made one, Japan made one, which were a lot more restrictive than what was existed in London. Nowadays, more or less, there are two important agglomerations of tax havens and offshore financial centers. The British one, which includes Britain and all the overseas British territories, including Cayman Islands, the British Virgin Islands, to name but a few. And then you have some European mid-states members, for example, Netherlands, Switzerland, Luxembourg, that they have huge ones too. The point of the official financial centers are the loose regulations that they have. Now, one of the major benefits, specifically in the British Virgin Islands, was the concept of the bearer shares. So the bearer shares are actually shares that are distributed to the people who hold the equity, but there exists a physical certificate. Now, when you buy this physical certificate, your name is not registered and no information is registered about you. The only way to claim the dividends is to actually go to the company and show the certificate. Hence, people would buy a lot of equity and just sell and buy and do transactions. Meanwhile, everything is in privacy. Okay, so Um, from the 1995s to 2006, there were a lot of efforts to crack down on loose regulations in these offshore financial centers and tax havens. A prime example actually is the act that was passed in 2002 by the Chief Minister of the British Virgin Islands that made a commitment to immobilize bearer shares, which basically eradicated the concept of it. Companies had 2 years to actually register all their shares in a formal administrative body. Now, there have been even more tries to crack down on the systems, primarily led by OECD. But the most important ones that we need to mention is the bilateral tax informational exchange agreements, which was signed between some countries in the world and states that there should be provisions of information between countries in case of reasoned suspicions of financial abuse. And similarly, the EU established another system of limited exchange of information in 2005, but the most important one has been the US foreign account tax compliance, which basically requires all foreign financial institutions to report to the IRS from January 2014 the value of and income accruing to accounts held by US taxpayers. The major key here is that the US doesn't enforce countries to comply, but it enforces businesses. So if businesses want to do transactions with the US, they need to comply with this act. So all the trouble of speaking with governmental bodies is avoided. Now, speaking about the global impact of tax havens, the economic toll of tax havens is undeniable. The foreign activities of American firms are mostly concentrated in tax havens, and according to IMF, tax havens operations comprise 6% of the total foreign employee compensation and 6.5% of the total foreign property, plant, and equipment. Tax havens collectively cost governments between 500 billion and 600 billion a year. Individuals also gain from these tax havens, as it is estimated that it could be up to 17 trillion the amount that is stashed from individuals in tax havens, or even more comprehensive estimates could reach up to 36 trillion. If that was the case, then we should add an extra $200 billion amount in the loss of governmental tax revenue. Obviously, political damage, which cannot be quantified, must be added to the toll. And the basic idea is that less tax revenue means less funds for the public well-being. So governments maybe cannot support education, cannot build new infrastructure. In case of a recession, they will have to increase the taxes, even though they might not have to if they receive all the tax revenue. But there are a lot of scientists and experts that claim that tax havens are key players in the world economy and international finance. Reports suggest that commercial banks near tax havens have lower interest rate spreads, which is the difference between the interest rate of lending and interest rate of borrowing. It seems to be the case that because there's a lot of competitiveness created by a lot of banks, since all of them are using the tax havens regulatory system. The private financial markets of economies with nearby tax havens extend more credit to the private sector, have a greater aggregate market borrowing, and have higher levels of M2, which is basically a monetary aggregate that's partly the product of intermediation by the banking sector. Another interesting statistic suggests that tax havens grow at more rapid rate than high-tax developed economies. Lastly, companies have more money to spend to innovation, for example, and R&D. Apple, for example, that has a lot of cash in tax havens, really benefits from this because it has more available funds to put into its products and stay on top the way it has been for all these years.
Thank you, Petros. That was very well put. And now we're going to move into the introduction to the British Virgin Islands, kind of where they're located in the world. They're located in the Caribbean Sea, just east of Puerto Rico, and they consist of 4 islands: the island of Tortuga, Virgin Gorda, Anegada, and Joist Van Dyke. The total population of these 4 islands is just over 32,500, and this is an estimate from the beginning of the calendar year this year, with the largest island, Tortuga, housing between 23 and 24,000 inhabitants. Next, we're going to move into the political history of the British Virgin Islands. The modern history actually started in 1901. Everything before that wasn't exactly written in stone. In the early 1900s, the British Virgin Islands saw little help from the British due to the World Wars, and as you can see, that for a developing nation, it is difficult to not have a lot of financial support when you're really starting to become an independent place. Around the middle 1900s, community leaders gathered groups of people within their community and marched on the then current council and declared that they wanted to start a new form of government. And this was passed in 1950, where they started a form of self-government. And as historians would say, this is kind of a placeholder, this self-government, for the new constitution that was implemented in 1967, where the British Virgin Islands elected their very first chief minister. Just as important as political history is the economic history of the British Virgin Islands. The British Virgin Islands started incorporating companies in the 1970s with a phone call from a lawyer in New York. We will touch on this in a few slides. But after a few years, hundreds of companies had incorporated into the British Virgin Islands. And the most recent estimate gave about 950,000 companies either had incorporated, struck, liquidated, or dissolved in or from the British Virgin Islands. So that kind of gives you a good sense of how popular of a place this became for companies to do business. In talking about revenue for the British Virgin Islands economy, a lot of it comes from offshore banking. I know Petros talked about it earlier, so we don't need to go in depth on that. The second largest piece is tourism, and the fourth piece would be agriculture and fishing. Agriculture for inhabitants of the British Virgin Islands includes livestock raising, and then fishing can include taking tourists on deep-sea fish trips, catching release, or catching for food to sell in markets. Next, we move into the history as a tax haven. It first became a tax haven, as we know it today, in the 1970s, as I said, with a lawyer, Michael Regals, utilized the double tax treaty between the United States and the United Kingdom to shield American citizens' assets from taxes. This double tax treaty permitted the offset of U.S. assets in British territories, and by 1981, the IRS caught on and actually canceled the treaty because of the amount of people and companies that were evading taxes. And in response, Regals and his law firm, Shearman and Sterling, helped draft the International Business Companies Act in 1984, which enabled tax advantages and privacy that would create the foundation for fiscal paradises worldwide, which allows the British Virgin Islands to hold one of their main advantages as a fiscal paradise with their privacy and their almost zero tax laws that companies and individuals have to pay within the islands. There were a few scandals that occurred that involved money laundering and tax evasion that caused a bunch of controversy surrounding the British Virgin Islands, one of these being the Panama Papers leak of 2016. And since the leak, the UK and the EU have issued stern warnings to change, to try and prevent more companies and people from money laundering in these fiscal paradises that have these privacy and these tax laws in place to protect their customers. And from here, I'll give it to Goldberg.
All right, thank you for that, Connor. This is Jared Goldberg, and I will be running through the British Virgin Islands tax laws, the importance of the ICIJ, the Panama Papers leak, and then lastly, our future outlook for the BVI. So to start, I'll run through the BVI's tax laws rather quickly. We broke it down into two groupings, individuals and corporations, and I'll keep it short and sweet. There are no taxes. I mean, for individuals, there's no income tax, there's no land or housing tax, there's no capital gains, wealth, or sales tax. For corporations, also no income tax, no dividend tax, no capital gains tax, no losses tax, no rate tax, and no surtax. So very tax-free environment, which I'm sure businesses love. Next up, the ICIJ. To preface, the ICIJ is the International Consortium of Investigative Journalists, and it's one of the primary opponents of offshore banking hubs such as the BVI. So the ICIJ itself is an independent network of over 200 investigative journalists and 100 media organizations, and the mission, as it is stated on the company or network website, is to uncover and highlight systemic failures that undermine the public good, using the power of technology-driven cross-border investigative journalism. So these trailblazers of the investigative journalism industry are essentially trying to encourage and almost force transparency onto these offshore banking hubs. The Panama Papers leak, which I'll touch on in the next slide, is the primary leak breakthrough that the ICIJ has had. But yeah, I'll touch on that in the next slide. Today, the ICIJ offers a public, very easy to navigate database, which has hundreds of thousands of leaked documents that are supposed to be secret documents of companies, trusts, and funds. And it's very easy to navigate, very easy to sort by name, name of the business, country. So if, say, it's a country that's based out of the United States, you could easily find that. And then lastly, jurisdiction. And one of the primary main jurisdictions would be the British Virgin Islands. Lastly, I'll talk about the Secrecy for Sale initiative launched by the ICIJ with the specific pursuit of injustices committed by fiscal paradises. And their goal is essentially to damage offshore banking by, as they put it, stripping away the secrecy associated with it. All right, so on to the Panama Papers leak. Despite the name, over 113,000 companies were actually under the jurisdiction of the British Virgin Islands compared to 48,000, so less than half, which were under the Panama jurisdiction. So many believe that it should actually be called the BVI Papers leak. In this leak, 11.5 million previously confidential documents of the law firm Mossack Fonseca were leaked to the public. And this counteracted the privacy that was touted by fiscal paradises like the British Virgin Islands and its ability to protect offshore identities. So this really dealt a blow. As a result, the BVI became subject to persistent offshore banking reform. Soon after, in 2016, the UK and the EU threatened the BVI to update its transparency laws and policy. As with these leaked documents, it was proved that a lot of the BVI privacy laws were enabling foreign investors to money launder, commit tax fraud, and break a lot of laws. So many consider this leak to be the beginning of the end for offshore banking. So that leads us to the final slide, future outlook. So the way that I break it down for future outlook of the British Virgin Islands and their status as a fiscal paradise is twofold. One, when will regulatory pressure take effect? For now, the British Virgin Islands is vehemently fighting pressure from the UK, from the EU to reform and become more transparent. But history has shown over the past 4 years alone that it's a lost cause. It's a fight that they're not going to win. So that raises the question of when will they eventually have to give in? When will it be too much? And this is mainly because the BVI is too reliant on the UK to handle the backlash of being blacklisted. Um, and the BVI government truly, and the Economic Council, they need to determine how much longer the offshore banking industry can actually survive with this impending transparency reform. That leads me to the next question, which is what will replace this economic void? As stated earlier, financial services accounts for 62% of the government's revenue. As we've stated earlier, these financial services are almost entirely related to offshore banking. So how can a company with such a quick turnaround replace 62% of its government's revenue? That's a big void to fill. And that leads to just government officials, economists, lawyers, businessmen that are all heavily involved in the financial services that have all enabled the BVI to become such a successful fiscal paradise. Well, they're the ones that are going to need to find, identify, and employ a supplemental revenue stream to avoid economic catastrophe. Relieving the economy of being so reliant on offshore banking will be the key to the BVI surviving this transparency reform and coming out, maybe not unscathed, but avoiding disaster. So that is all. Thank you for listening.